I must say that it takes a brave heart to talk of banking in the era of growing stressed assets and ballooning non-performing assets. And I must compliment you for being here, and thank you for being here. I wanted to start with what is at the heart of the spotlight of what's going on in the Nirav Modi case currently, and then we move on to the stressed assets issue, which is the issue of letters of undertaking, letters of credit. Now, we've been seeing letters of undertaking, letters of credits being misused for decades. You know, it was there in 80s, late 80s, there have been frauds recorded. 90s, PNB itself had a fraud in London related to letters of undertaking. 2000s is carrying on, and I don't know how long it will carry on. So what really is it that makes it so difficult to track and control letters of credit, and why is it so vulnerable?
So, you know, Rajeev, one of the things I'd like to say is that it's not any instrument which is vulnerable, it is a systemic issue. And when we talk of letters of undertaking, which is nothing more than a bank guarantee, or letters of credit, which are there to facilitate trade, these are actually very useful instruments for the business of banking. I mean, this is what banking is about, that you facilitate business and you facilitate trade. However, there are certain departments in every bank which are prone to fraud. This is much before the digital age and much before computers. If you have two people who collude, and there's one guy who has the, chabi to the tijori, and the other guy is the one which is supervising you, well, then of course you will have a fraud. And departments which are prone to fraud, it has always been what we earlier called telegraphic transfers, now SWIFT, the Nostro department, simple things like dead and dormant accounts. So anyone who has grown up in banking knows that these are areas which are prone to fraud, and therefore, these are also areas where there are, extra safeguards. So when you have an operational risk framework, you look at all banking transactions, but you look very, very closely at these ones. And, what I do want to say, and I think it's really important that we say that, is the problem with the Nirav Modi case is that many things are being lumped together. So it seems very, very clear that two individuals, Shetty and this gentleman called Karanth, did issue fraudulent LOUs, or letters of undertaking, for a prolonged period of time from 2011 onwards, and that therefore there is probably no doubt that fraudulent LOUs were issued to the Nirav Modi group of companies amounting to 12,700 crores. However, the question is, are all of these LOUs actually translated into non-performing assets or losses for PNB? And if that is the case, then it points to widespread systemic failure. That means that there were many people who were colluding, not just in the bank, but in the auditory framework, external auditors, internal auditors, RBI auditors, regulators, not just colluding. So we are talking about dishonesty, we are also talking about incompetence.
So you're saying essentially that it's not the LOUs that is the problem, it's the fraudulent LOUs that's the problem.
Absolutely. I mean, certainly LOUs, LCs, these are very, very important instruments. I would say really bank guarantees. I don't know why we are still issuing LOUs, but, guarantees, letters of credit, buyer's credit, these are very, very important parts of trade, and, they need to be facilitated.
Abizer, is it essential? Is it essential to foreign trade? And why do we need LOUs, for instance?
Yes, absolutely essential to foreign trade. There's no question about it. But first, let me also tell you that all that glitters is not diamond either. So I think one is important to understand that LOUs are used. What is an LOU basically? That somebody needs some money to buy raw diamonds outside of the country. And he does not have the credibility with the banks in those countries to be able to buy those diamonds. So all he does is he tells a bank with which he presumably has credibility to say, why don't you issue a guarantee on my behalf so that I get some credit outside. That bank outside has credibility with that Indian bank, and based on which he gives him credit. It's as simple as that. So LOUs are absolutely essential, because if that person has to buy diamonds and pay for it, then he would need to rely on the credit that he has in the country.
Right. Let's come to the issue of how serious is this crisis in the banking system right now. I was looking at the numbers, and if we look at the PSB net worth, the net worth of all public sector banks, it comes to something like 4.99 lakh crore. NPAs alone, that are known NPAs, as of now, recorded NPAs is 7.33 lakh crore. There's going to be more NPAs coming because there are expectations, and we'll come to what could be the next NPAs. But more importantly, aren't we already technically bankrupt? Aren't the PSBs already technically bankrupt?
So, I'll tell you one number which you have not. You talked about net worth. I will talk about market cap.
Yeah.
By the way, market cap is half of net worth, because most PSU banks are traded at 0.5 times book value. So the market cap is even worse. And if you are going to be raising additional capital based on market cap, you are worst off. That's one. Secondly, I think this is a good statistic and fairly scary statistic. The reality is that more than 60% of the average shareholding of a PSU bank is held by the government of India.
Correct.
Correct? So that capital effectively comes out of the treasury of the government of India.
Correct.
Right? At the end of it, please do realize that banking as an industry, and Meera will know it better than me, which requires capital as a raw material every year, cannot be relying on a budget to fund itself.
Yeah.
So that's a fundamental problem that we have in the system. And the fact that this problem today is of such magnitude, it further accentuates it. And we had a government which announced that they are going to put in 2,11,000 crores. So we'll see the capital.
Meera, I have another set of statistics, another interesting statistic. When I looked at the PSB numbers and I looked at just the profits and losses of public sector banks, you take all the profits of all the banks and you take all the losses of all the banks, and you are in the negative by 10,200 crore in 16-17. That's another scary statistic after all. For an entire public sector banking system, the government-owned banking system loses 10,200 crore last year.
So I think, Rajiv, there should be nobody in any doubt that, of course, it's a very, very serious situation. And to your first question, are we in a crisis situation? The answer is yes. The crisis is of money and of capital, as Abizer has pointed out. But I believe it's actually a more serious crisis. And that is this. Banking is nothing but trust and credibility. If you don't trust your banker, then there is no bank. Let's be very, very clear about it. And the crisis we are now facing is that across the country, people believe that all bankers and all banks are crooks or incompetent, and that the regulatory framework which is governing are also completely incompetent and potentially crooked. And then we have the whole issue of political interference and electoral funding and cronyism. And there is a sense that something is completely rotten in the system. Now, whether you believe that or not, and I'm actually one of the people who believe that it is not as bad as it's stated. There are many, many bankers. In fact, I think most bankers are honest people. Our RBI is an extremely credible organization. There are problems, yes, there are problems. But the crisis which we now have is that people do not have faith in the system, in the banking system. We've just had a discussion on politics, so we'll not go there. But they do not have faith in the banking system. And at the moment, bankers are paralyzed by fear. I dare say auditors are also paralyzed by fear. And I'm sure you in the audience have experienced this, but I've been getting calls for the last couple of weeks saying no one is willing to lend. Whether it is exporters, whether it is small businesses, whether it is retail customers, there is now a paralysis in the system, and that is not good either for the banking system or the economy. So we do have a crisis, and it needs to be dealt with swiftly, clearly, and with a lot of transparency.
So we'll come to the crisis and how to deal with it. But Abizer, how did we get to this stage? And when did it all start? When do you think the problem in the banking system started?
So
we might go back 30 years to get to that.
I'm a bit of a historian, but if you just go back a few years, 2007, not that far away. 2007, when Lehman had crashed and the whole global economy was down, Indian credit was growing at 26% per annum. And it grew for 26% per annum for 3 to 4 years. And I give you a small anecdote. I actually remember at that point in time, right now, one of the promoters told me, one of the promoters who's part of the first 12 companies, by the way, he said that in 2008, when they wanted to raise 4,000 crores, the banking system offered them 12,000 crores.
Wow.
And the reason is that if one bank grew at 26%, then another bank dare not grow at less than 26%. So everybody was there right with a checkbook to offer you as much money as you wanted. So the system got pampered, as a result of which we expanded beyond what we could. We installed capacities far beyond what the means were. We acquired companies overseas. We had so much liquidity that we bid for government contracts at very, very, very competitive rates, because government contracts was what was going. And India thought that we were a decoupled economy. Come 2010, 2011, we realized that we are not a decoupled economy. And guess what? The first person who realizes that they are not a decoupled economy is the promoter.
Sure.
And what does the promoter do? Pulls his capital out first, because he knows that's a problem. Second, he plays the banking system, games it, by effectively borrowing more money just to pay the bank's interest.
Yeah.
And that goes on for 3 to 4 years, as a result of which we double the amount of debt that we had originally taken. In fact, there's one company I remember where the increase in net assets, which is whatever net assets they built over 3 years, was 150 crores. And the net increase in borrowings was 3,000 crores. It basically goes to tell you that all you've done is funded interest. So that effectively came to a halt in 2015 when Dr. Rajan decided to burst the thing out. And that is the genesis of this crisis today.
And so, Meera, the 5 attempts that the government made, not the government, RBI and with the government made to deal with this somehow, do you think they were all half-hearted? They were all like, meant to brush it under the carpet? Or was there at all a serious attempt, CDR, SDR, S4A, 525 principle, God knows how many, 5 attempts RBI has made to resolve this, and yet we are in this crisis?
No, I think, once again, I will step back. I think what Abizer has said is very true. But more fundamental to that is a mismatch. So when you are a bank, you take deposits from customers. That is your basic, fund base. And deposits by nature are either demand deposits, so I put money in a current account or a savings account, I can draw it anytime I wish, or it's a fixed deposit. And my fixed deposit is for no more than 3 to 5 years. So the funds that I have are short-term funds by their very definition. Therefore, if I am going to lend to projects, and many infrastructure projects which are 15 and 20 years, I have a funding mismatch. So when Abizer said the problem goes back to 2007, it actually goes back a lot longer. Many of those who are, our age will remember we had the development financial institutions, the precursors of ICICI, IDBI, and IFCI, where a generation of bankers were trained in project finance. And remember that the risks of a project, especially of an infrastructure project, are completely different from lending for a car loan, or for a housing loan, or for a working capital facility. The commercial banks of India were nationalized to lend to small people.
Absolutely.
Right? So, to small businesses, to farmers, to individuals. They were not nationalized to lend to huge cronies or to huge infrastructure projects. When that switch happened, you had people who did not know what they were assessing, making loans, and you did not have the funding base to do so.
Exactly.
And what is more, structurally, Rajiv, where we have LIC, where we have pension funds, where we have provident funds, these funds are not allowed to lend by charter to infrastructure. So the problem in India is systemic, it is structural, and what it shows, unfortunately, is that the mandarins in the Ministry of Finance have not understood what is the funding requirement of a growing India and how to fund it. They have misused the banking system, not, I think, for any malicious reason, but just for lack of understanding.
And so the short-term funds were actually used to lend to long-term projects. They were evergreened every 5 years with bigger and bigger projects and larger projects. And so the MDs and CMDs got their promotions, they bloated their books and left it for the next guy to handle it.
Oh, I agree. But I'll also, let me just, one more moderation to this, is that, yes, you're right, but we had those same project finance institutions who then became commercial banks and supposedly inherited the project finance skills. They're also part of the same mess today.
Absolutely.
So I must tell you one thing, that while it's not only about skill, I think the balance sheet mismatch, I'll tell you, in India, our banks are pampered. especially government sector banks. Because when we put deposits in, theoretically you can withdraw the money today, but practically nobody withdraws it for a long, long time.
Sure.
So actually we have long-term funds. The other issue is that in India, when we went into project finance per se, or when we started financing government projects, I would agree with Meera that we never clearly understood them. And the inherent skills are phenomenal. So I was just talking to one person just before this, and he was telling me that in Australia, when a government project is financed by a bank, every approval, every land acquisition is in place. The only risk that the financial institution takes is an execution risk. In India, we take government approval risk, land acquisition risk, government finances risk, many more. So actually, our risks are in a way non-quantifiable because of the environment that we live in also.